You are listening to Mining Stock Education.
It's Mining Stock Education, and I am your host, Bill Powers, speaking today with Joe Mazumdar, the expert from Exploration Insights.com. Joe, thanks for coming back onto the show. Let's start off with getting your insights and commentary on Foran Mining's $350 million private placement. What do you think about this CapEx raise?
Yeah, so this capital raise was probably underlined by the fact that they raised their capital estimate. So they have this McIlvenny Bay, looks like a gold-rich volcanogenic polymetallic massive sulfide deposit. It's not big. Like the indicated resource is about 40 million tons, but it's got decent grade, almost 1.2% copper, some zinc, and about 0.4 grams per ton gold, which helps. They increase their capital estimate, their upfront capital estimate, to over $1 billion. So that's another 200 million from their previous estimate. So that's the money that they probably lacked from their last estimate. And as you said, this 350 million raise was to basically fill that gap and leave them with a little bit more money for working capital, or if they have any other issues, because in the time of tariffs and other constraints and all this other stuff, there's a good chance costs might even go up higher, and maybe not as high as what we were experiencing during COVID, but there's a lot of uncertainty with people's numbers, and to have more money probably makes more sense.
If you're an investor, would you be happy then if they're topping off the capital in this manner?
Well, they need the money, but I mean, if you looked at where they peaked, they peaked last year at about $4.69, and now you're raising at about a 34% discount to that price at about $3. So yeah, you probably, as a shareholder, you're probably not feeling too good. But if you look at who gave them the money, it wasn't a lot of retail. There was, I believe, 4 funds, the Canada Growth Fund, you had Agnico come in, Fairfax Group, and another institutional equity group. All of that made up, the majority of the funds. There was not a lot of room for other people, but they gave them a big discount to come in, with no warrants, but with a big discount for to come in at this level, this quantum of capital.
A recent acquisition was Pan American Silver acquiring MAG Silver Corp. Do you like this one?
Depending who you are. We've seen silver M&A, Mexico focused with producing assets, whether it's Gato Silver, First Majestic, Silvercrest, and who was that? That was, I forget who the Silvercrest one was. Was that Coeur? Yeah, I think that was Coeur. Yeah, so you did see this momentum build up for producing silver assets, to get leverage to more exposure to silver going forward, and the fact that there's very few, silver dominant assets that are in production out there, and so as these things were getting acquired, there was less and less to choose from. MAG was always out there in terms of a choice. It's silver dominant. It's a big resource, but problematically for a big company, you've got a non-operating ownership. You're buying 44%. So you're giving the operator risk and everything like that. You're giving that to another company, and so that's what people are buying. They're buying you as for like a silent owner of this asset, which makes sense for MAG, that because they don't have that expertise, but it probably makes less sense for Pan American, which basically tout their ability in terms of operating experience. And Pan American has been acquisitive. They don't do a lot of exploration, at least greenfields, grassroots exploration. They might do brownfields, but they don't do a lot of grassroots. So they've been growing by acquisition, back with Tahoe, before the Yamana stuff. So they're like similar to Equinox. There's an acquisition there every couple of years coming. And so this one, I think, makes sense from a Pan American Silver point of view. It's cash flow. You lower your all-in sustaining costs. You get more production in silver, not silver equivalent. Because the Pan American has, the largest silver reserves. But, in terms of production, they don't beat Fresnillo or some other companies because they have more gold. and their problem is a lot of their reserves are held in assets that may never get built or restarted, like Escobal and Navidad, Escobal in Guatemala and Navidad in Chubut in Arizona. So they're just sitting on the balance sheet in terms of reserves, but they may never get built. So now you're taking on production, you're getting free cash flow, you take no operating risk. You don't have any capital escalation risk. It's all out there. There's some growth, but the question is, you got to do it at Fresnillo's pace, not yours.
Is this their only minority interest? Pan American in a major mine?
Yeah, I don't think that they have. They're operators on most of their operations, like everything that they got from Yamana, obviously the Tahoe stuff, and their own assets, like the big ones, La Colorada and Dolores and all that sort of stuff, and everything in the Timmins. That's all them.
What they got from Tahoe, I was a shareholder of Escobal way back when. And do they have that on the books as reserves? When you mentioned they have the largest...
Yeah, they haven't taken it, as far as I'm aware, they haven't taken it off. Whereas, I mean, because they don't want to give the market the signal that it's a hopeless cause. Because if they wanted to do that, they should have done that when they acquired it. But then that would look kind of stupid, saying, oh, we paid all this money for Tahoe, and as soon as we get this asset, we're going to take it off reserves.
But didn't Barrick do that for Donlin, right?
Well, yeah, because it's been sitting on their books for almost 30 years. But that's why they sold it as well, because they knew that that's where they were heading. I mean, we at Newmont, there was this asset called Cerro Quilich in Cajamarca that was linked to Yanacocha. We had to take it off reserves because the community didn't want it. Then a bigger asset, Conga, copper gold porphyry, up in the same region, Cajamarca. The locals didn't want it, so that was taken off reserves as well. Because if the probability of getting it into production is like very low, you don't want to raise expectations that you'll actually be able to do something with it, and it's in your valuation in terms of people's forecast for production and that.
How are the major gold miners what value are they being given for reserves relative to current production or near-term growth?
Yeah, it's quite a premium for reserves over let's say total mineral inventory, and producing assets get a premium, but also producing assets in the hands of a diversified major get even more of a premium than a single asset producer, and I think that's justified because financing wise they have more capacity to fund the project, but also expertise wise, they have more people there to build the project. So that's why they tend to get a premium over a single asset developer, like your McIlvaney, like these guys who had to offer a big discount in their share price to help fund it, or I-80. They raised a significant quantum of capital that I think they closed recently. Was it $170 million US? That they had to offer a discount of, I think, 11 to 12%, but that also came with a half warrant at about, I don't know, what is it, about 30 or 40% premium. So all that was to incentivize people to take their paper. That was the important thing. But, a bigger company might not need to do that. And, most of them don't want to do that.
Gold stocks have been outperforming the NASDAQ this year. Do you see the fund flows into gold stocks relative to the NASDAQ?
Well, I mean, it might switch just because, just recently, obviously, we saw, the negotiations between the U.S. and China on the tariffs. And so any positive sentiment on a resolution on the tariffs brings back the risk on trade, and the risk on trade, elevates Bitcoin in favor of gold, but also equities in favor of gold. So we've seen a little bit of that over the last 2 weeks. So I'm not convinced that we're on one side or the other. I mean, what we may get is still a demand for gold from central banks, from retail, just for the gold, physical gold, but that might not spill over into equities.
Joe, when you look at a junior miner, and you're also paying attention to the macro commodity effects or bullish or bearish impact of that commodity, what effect does the overall commodity movement have on your pre-planned exit strategy, especially because you follow these companies so close? Can you talk about how that affects it?
Yeah. So, I mean, If you're talking about a single, I mean, like a non-cash flowing company that is doing exploration, let's say, I find that the reason we invest in them are not so much for the beta and their leverage to the underlying commodity, which they don't have a lot of. If you really wanted leverage, you would buy a cash flowing producer with that commodity exposure. You wouldn't buy a junior explorer. What you're looking for in a junior explorer is more the alpha that they actually find something, which is not directly linked with the commodity price. So you can have a company outperform even in an underlying negative commodity environment because it discovered something. So there's a bit of a, it's not like one to one. But I will say that, like divestment wise, with your Newmonts and that, they sold producing assets into that market of good sentiment because the companies that bought them were able to raise funds to buy them because they wanted cash. And so they took advantage of that. When I look at selling, if there is something holding up a stock, and I've sold a few, then I would take advantage of the market of the positive sentiment to sell into that, even though I don't believe that, there's much of a link as to the performance versus the commodity price. Because one thing it does for these non-cash flowing juniors is lower their cost of capital because they have a higher probability of being able to raise money when the sentiment is better.
On the idea of raising money, how do you view the financing window for juniors right now?
Comes and goes. Like right now, since December, companies in our portfolio, my portfolio, they raised about 270 million bucks. In the market since December. I mean, there was, and you could, a lot of these assets in good jurisdictions, Australia, the US, Canada, but some, like Kazakhstan, other one in Northwest Argentina, because Argentina, from the federal government perspective, is looking better. And so if you're in the right province of Argentina and now federally it's looking better, that's becoming a good place that people want to spend their money. So it got to do with jurisdiction. Commodity, most of this was gold, silver, and copper. And could be all stages. The Kazakhstan one was grassroots exploration, but some of these guys are all to PFS level. So quite the range of stage. Jurisdictional wise, that might be a result of what I chose rather than maybe at the market as a whole. But yeah, definitely jurisdictions that people are comfortable with. And the quantums were significant. Most of the companies I cover in the portfolio, I prefer, quality of management and all this other stuff. So none of these guys raise with warrants. And then on the people giving them the money, 3 of them had strategic investments by majors. So that's also something that's underlying the market as well. Majors coming in to these private placements.
I was reading a tweet by Robert Friedland recently, how he was pointing out that the treatment charges for copper have been negative for over half a year. What's your take on this?
Yeah, well, we got these things called treatment charges. So you got treatment charges, TCs, and then RCs, refining charges. And so they could be high, like $100 per ton. So $100 per ton of concentrate that I treat, I'm going to charge you. As a discount. And then I will also charge you 10 cents per pound of the refined copper that I take out. So it's usually 110. If it's $90, it's 90 and 9, 80 and 8, whatever. And now as it's negative. And so what does that mean? Back in the 2000s, when I worked as a market analyst and a trader for Phelps Dodge, the TCRCs went negative. And what was driving that was the supply side. And the supply side, there was an accident at Grasberg, an open pit slide that took, I believe, about 500,000 tons of copper in concentrate off the market. And that was a time where China had a voracious appetite for copper. and it drove the TCRCs to nothing. At the same time, I think India was building a smelter in India. I think it was Burla. But yeah, so you had more demand because you had some new smelters coming on, but then you had less concentrate. So you had a similar thing happen here where you had a lot of smelter expansion, mostly in China, which they've actually curtailed because they know that they're like basically screwing themselves right now with the TCRCs. So you had smelter capacity increase, which increases demand for concentrate, not for refined copper. We're talking concentrate because that's what they do. And then also at the same time, you had Cobre Panama, which at the time was 1.6, 1.8% of global production, come offline. So you had less copper. At the same time, you had more demand for that copper and concentrate. And so that had a, double impact, one big step down from $80 per ton and 8 cents per pound of refined copper in terms of the TCRCs down to zero was mostly Cobre Panama coming off. And then it's staying flat for a protracted period after that was basically smelter expansion in China. And then I think now with the potential for tariffs and all this other, uncertainty, and smelter expansions, that's made it negative for longer, which is a positive for miners that produce concentrate, but I don't think it's a long-term sort of phenomenon.
What do you think the impact over the next 6 months is going to be on the price per pound of copper?
Well, I mean, they're two different things, right? One thing is what the smelters are paying off of the price. So the price is of the refined, and then the TCRCs is a discount off of that. So what's driving the price is what's happening in the refined market. And to look at the refined market, one good way of looking at that is looking at what people pay over and above the copper price. So when I used to work in the market, you would look at cathode premiums in certain jurisdictions, especially China, to know how tight the market was. So some people will pay 5, 10 cents, something more than the actual premium, than the price because they want the copper, but they want the refined copper. And so that is a better way of looking at, what the actual refined copper, because it's supply and demand of a different product. Because the smelters are driving the demand for concentrate, and then they produce and they could potentially flood the market with refined. And so the refined price might come down, even though the TCRCs might be negative, it could happen. I would say that, people got to understand the product that you're producing. And when you get more into critical minerals, you'll realize that, this mine doesn't produce this. It actually produces this over here. And it's got to process a few more times before it gets to this price, which is the price people quote when they talk about, hey, this price is going up. Yeah, but I don't produce that. I produce this. So how are you going to get there? So those are the questions you got to ask when you look at it. I think the copper market is going to continue to be a supply issue. In terms of permitting projects, developing projects, the copper and the capital intensity of building, so it's going to be harder and harder for people to build projects. And we saw like in the Trump administration saying, "Oh, you know what? We're going to do permitting in 28 days or something like that," which is positive, but even resolution, with the land swap, and now the courts are, disputing whether they're going to do the land swap or not. So there's only so much the federal government can do to get the permitting process accelerated, especially when, they're also cutting the bureaucracy that does the permitting. That makes it a bit slower as well. So there's some encouraging things in the U.S. with respect to permitting, but also we saw how the arbitrage on the COMEX versus the LME, that blew out. I think almost to 70 cents at one point, with the idea that, there might be 30% tariffs on cathode coming into the country, into the U.S. And so there's a lot of market issues that are happening right now that will manipulate the price. But the underlying thing, the long-term thing, is still this supply and demand of concentrate for the smelters, supply and demand for the refined for manufacturers.
Joe, on permitting in the U.S., Trump signaled he wants permits to go forward, not just verbally, but by appointments, as they say in politics. Personnel is policy. What is your thoughts regarding David Copley? He's a former executive at Newmont. He was appointed to oversee the mining portfolio for the newly established U.S. National Energy Dominance Council, and he's now the highest-ranking federal official focused on shaping domestic critical minerals policy.
Yeah, I think, you definitely, when you have somebody writing this sort of policy, you need somebody who knows what they're talking about, because I've seen a lot of these government guys talk about critical minerals and all this other stuff, but they don't understand processing. They don't understand how a mine works. They don't understand any of that. And so they'll make these statements, but they have, anybody who knew anything about mining knows that, they don't know what they're talking about. So it's good when the bureaucracy puts in people that actually understand the market, and then the policy will be driven with their insights, as well as their, communications with the industry, as opposed to talking about things that, that nobody understands and the industry thinks that it doesn't matter. So yeah, I think that's a very positive move in terms of getting somebody with links to the industry to run something that sounds very important.
And didn't you have in Canada like an anti-mining person in charge of your comparable position? I don't know Canadian politics as well, but wasn't there something?
Yeah, I mean, there's the federal part, but there's also provincial part. And for me, I the permitting in Canada, I don't think it's that big of a deal. Projects do get permitted here, even in British Columbia. The problem is infrastructure. The problem is capital. To build some of these projects takes a lot of money because there's no infrastructure. There's no road to that project. There's no power to that project. And if you include that in the capital of the project, like let's say a casino for, Western Copper and Gold, that's probably too much money for them. I want grid power. Well, that requires whatever, hundreds and hundreds of kilometers of grid from the BC grid that some people tell me that it doesn't have the capacity to give them anyway. So do you do a diesel generator? Like, Donlin Creek, why did Barrick walk? Infrastructurally, that thing's very remote and it's refractory, needs a lot of power. And so do you want to expose yourself to a project that could have a big capital problem? So the permitting doesn't seem to be that big of an issue for Donlin. They, managed to advance the permitting quite well in Alaska. But
and they'd have to build their own enclave all the way out there for the refractory ore.
Power, they got the power. I mean, this is, you would need an autoclave. Yeah, absolutely. Yeah. But I mean, I looked at this project when I was with Newmont in the late 2000s. And, the big problem is that capital number was high. And that was back when it was $1 billion. Incredibly, what these guys paid for it was actually lower, if you take real dollars, than what Barrick offered, 20 plus years ago for Nova Gold. And on a share price basis, that was a much better win for shareholders than this is, because now they're buying Barrick's spot. They're not selling theirs. So it'll be interesting to see how this goes, but that will need a lot of money. And there was no other bids. This was, institutional equity, John Paulson, Electrum, and these guys that bought into it. It wasn't a mining company.
When the development CapEx guys are looking to finance a project, what gold price are they modeling right now?
I would say a lot of the reserves have come up, because, come up significantly. I mean, just a few years ago, where we're talking about 1,250, and then that moved to 1,500, which seemed like a big deal. Now, a lot of the reports I'm seeing coming out are like 1,800 to 2,000. Probably banks want to be conservative because some of these things are 20 to 30 years, and in terms of the price. But you could see some projects like I saw.
And then what discount rate goes with that? If they're going to discount the gold price that much, what discount rate do they use on top of that?
Oh, well, ridiculously, it's always 5%, okay, even though the capital cost of capital.
Rick Rule told me he used 15% when he would model at Sprott.
No, some of these projects, their cost of capital, especially if you're a single asset developer, they're easily 15 to 20%, but analysts still discount them at 5. So using 1,800 to 2,000, but if you look at the all-in sustaining costs, some of these guys are sitting at $1,800 to $2,000 in terms of all-in sustaining costs. But the gold price is 3,400. But you could get puts, and some of these people have done that when they're funding. They put puts in, and so they've used their cash to put the puts in, and then the banks feel better about it because they've got puts in place. And so even if the gold price is volatile, they're guaranteed to get their money back. And so you might see a little bit more of that, especially for single asset developers.
Have you ever seen a mining financier being taken down by a couple of bad deals, like back to back, to where they just lost it?
Yeah, I mean, I don't have specific examples, but yeah, I've known that people that have had to restructure because they've made several deals, or their next deals were restructured differently because they lost money because of the way they structured the last one.
Were they like an offtake partner that also provided the development CapEx?
Yeah, it could be offtake partners, but also it's like, you think, oh yeah, hey, I'm screwing the company. I'm it's like a 15% coupon rate, blah, blah, blah. And then the company can't pay it. And the reason you got the 15% coupon rate was the asset was flawed. Oh, they didn't have measured and indicated they were dealing with inferred. And so you got screwed on another asset because that's what happened to you. And so you go back to those guys. We're not giving you another cent until you get more indicated, or at least 2 years of measured. And then these guys say, well, I don't have the money to do that, because the money you gave me is for development. It's not for infill. And, the market doesn't care about infill. So, it gets to be a quandary in terms of being able to do the correct mine plan, because the market might not fund that. Retail won't fund, oh, hey, I need 2 years of measured. Like this, some of these guys, base metal guys, I know with the Arctic deposit, South 32, I mean, they almost want 5 years of measured. I mean, that's a lot of drilling. Could a junior do that? No. Absolutely not. Like if Trilogy was doing that project by itself, there's no way they would drill out 5 years of measured. But these guys want it. They want to know that, okay, if we do this mine plan, that's going to be there. But there's less money out there for juniors to lower the risk of their mine plan by drilling a project out more than they can afford to do.
Do you like polymetallic deposits where there's not like one super dominant metal?
Polymetallic is good and bad, because the problem with the polymetallics is when you're a junior, there's the tendency to do a copper equivalent, a gold equivalent, a silver equivalent, such that the underlying commodity that you're interested in, whether it's gold, silver, or copper, might be 20 or 30% of the overall revenue. And then you throw in zinc, you throw in lead, you throw in whatever else. But then that makes the metallurgy more interesting and potentially complicated, because then you have to change the process flow sheet where you can actually generate products, whether it's a zinc concentrate, a lead concentrate, which carries some of the silver, a silver doré product. So when I look at these polymetallics, that's what I sort of dice through, is like, do you actually make any money off of this? Because sometimes you have to send a concentrate to the wrong smelter that gives you a very bad payable for that metal, but they're the closest one, or they give you the best deal on the main product. So all of this comes into polymetallic. So polymetallic can be problematic in some instances, but it's nice in terms of, with the critical mineral stuff, like, hey, you got a gold project, but oh, hey, you got 20% antimony, or like with the one in Idaho, like
Stibnite. I think we might have talked about it last time.
Yeah, but I mean that helps them fund their development, and so they reduce their cost of capital, but still 80% or whatever. Not, I think it's even 95% is still gold, so they get almost 100% of their capital related to the antimony. all the upside, and most of the retail and institutional equity is interested in the gold. So that's great. That's excellent. In terms of when you're dealing with that kind of a polymetallic.
Joe, you were recently in Peru about a week ago or so. Can you give us some insights from that Peru trip and your thoughts overall of what's going on in Peru?
Yeah, so I was down there for about 10 days. I flew down there, and as soon as I landed, I had a 7 or 8 hour drive down to the south, and then another 5 hours to go see a project in southern Peru that's more like an IOCG sort of thing. Then I drove back 12, 15 hours or whatever to Lima to go to this conference. And the conference was interesting. I wasn't there for long, but the night before the conference, they had a big, like a thing for the speakers and other people. So I went to that, and then I just found out about an incident that just occurred at a mine, a small mine, gold mine in northern Peru in a region called Patas, where like I think it's 16 or 17 miners there were kidnapped and then killed, murdered, basically. And this project, this mine, well, I knew the last time I was in Peru, which was October, November, there were problems in that, and they did have some problems with security in that. And now they say about 39 people have been killed on that project over the last several years in that region, in the Patas region. So there's a real growing issue with illegal miners linked to criminal gangs in parts of Peru. And that's, that's problematic, especially for high grade deposits that are easy to mine from surface, whether they be copper or more so gold and silver, because that would be what these guys want to get.
Do the locals not give pushback to the illegal miners? Because like the legitimate miners that go in there, sometimes you have to fight for years for community access.
Yeah. Yeah, well, so here's the thing is that, so what I was noticing in some areas, because it wasn't around in the 90s when I worked there. It hasn't been around, it's been more recent. It's been basically grown over the last 10 years. As people, get frustrated with how long it takes to permit and stuff like that, and communities are looking for money from their mineral resources. Some guy comes up, hey, I got a truck, I got a shovel, I could take it to a plant, I'll pay you this. They avoid the permitting, they avoid the DIAs, the FTAs, all that sort of stuff that takes anywhere from 6 months to 2 years. Just go in there, mine it. They have their social license to operate because they're paying the communities direct, and then they leave. This is a bit different what happened in Poderosa because there is an active miner there. That's a Peruvian company that's actually mining that deposit. And so there's a battle between the illegals and these guys, and that has taken to these guys are obviously linked to a criminal element given their propensity to do what they've done. So that is escalating it to a different level. I don't say a lot of the illegal miners are like that. They're mostly linked directly to the communities. They come in, offer them money, do it, but they're not going to kill anybody or anything like that. But they're still problematic because when you're doing exploration in that, and you got to wander, and these guys create their own social issues, and they also environmental impact that you as an exploration guy or the guy who's trying to do everything right might have to wear. So that's the big issue right now. Permitting is a big deal in Peru, which they're trying to scale down in terms of timeline. But now this illegal mining stuff is starting to take the forefront of being an issue in Peru.
Mm. And how does that affect legitimate miners? Any more insights you can share on that?
Oh yeah, it impacts them
because they're not going to mine a porphyry, right?
Yeah, no, they're not going to mine a porphyry. They're not going to mine a big disseminated deposit that's a heap leach or something. They're going to mine these high grade vein things more likely than any other thing, low tonnage, high grade. But I mean, you might have a big deposit, and then you might have these, overprinting high grade veins, that you're not maybe interested in, but these guys are mining, but they're sort of ruining it for you, let's say, and then you feel a bit put back because you have to do this DIA that takes 2 years. You're paying for this archaeologist study, you're paying for all this other stuff, and then these guys just walk in and take, what they want. So there's this, local push to say, oh, our resources for Peruvians, not foreigners. But these aren't only foreigners. Poderoso is run by a local Peruvian mining company. And so a lot of these guys want, social license to operate. They want, better permitting and all this other stuff. And then suddenly they're allowing somebody else to come in and take it. And that could disgruntle people in terms of doing the right thing. And so, it's easy to solve. It's not hard to solve. The problem is you just need the will to do it. And so there's going to be an election in Peru on the federal side next year. And so that'll be important to see, which way these people go. And, because usually, what are they trying to push? And this will be an issue that'll come on that'll be important out there.
All right, Joe's website is explorationinsights.com. As you can hear, he's boots on the ground at these projects, in addition to his decades of experience working for Newmont and other companies within the mining sector, both on the issuer side, the miner side, and the investment side. And Joe has his eyes closely on what he invests in and articulates that to his subscribers. So if you like what you heard, head on over to explorationinsights.com. Joe, I always appreciate checking in with you every 3 months. Thank you for coming on the show.
All right. Thanks a lot, Bill.